So, income from capital gain. Well, as in part of direct taxes, it is one of the very crucial part of your subject or the syllabus. As capital gain is something that not every individuals or not every kind of a person will have in every particular year. It's a kind of an income that is very rare at times. Okay, for some people like a very high range businessman or a high rich person, for them capital gain is maybe a very usual thing for them. But for a normal individuals like us, normal persons like us, capital gain is some kind of an it's a kind of an income that is very rare, happens in a 4 or 5 times in a lifetime. That would be the better part to explain it. But again, it is very subjective. It is not like a salary, or it is not like your rental income or something kind of that, because it doesn't happen very usual. It is very less happening kind of a capital kind of an income. So rather than elaborating more on capital gain, I'll just get into that concept. Okay, so what is basically capital gain? To understand that, first you need to understand what is a capital asset. So capital asset, first thing, assets. We all know what is an asset. Okay. Basically, for every kind of a subject, different type of subject, definition of asset keeps on changing. Okay. Like for example, if we are going for a financial accounting or kind of subject, then the definition of asset is like what we use for ourselves. It's the kind of definition we learn. Like whatever things we use for ourselves, kept to ourselves for a longer period of time, that is what we call as an asset. Okay. For when we are going for a management kind of a definition, then the definition states that whatever things will give a return in future, guarantee a return in future, then that kind of a product or that kind of an item will be called as an asset. For taxation, what is an asset? That we have to first learn about it. So as for section 214, we have a definition of capital asset, or we have what is basically capital asset. So property of any kind held by the SSC, whether or not connected to business or profession, any security held by foreign institutional investor may be tangible or intangible. Now, it is not the actual frame of the definition. I've just cut it into pieces so that you can we can well get versed with that content. So, what is capital asset? It is like anything, any kind of asset, any kind of property, any kind of material. Okay, that is held by the SSC. So the SSC should hold it. The ownership, the title should be rest with the SSC. Okay, so the SSC should be owning it, and it should not be used for business or profession. It should not be used for any kind of thing. It should be used for your own purpose. Like you are using it, you are not keeping it for any business or profession. Like for example, if I have a motorcycle, for example, I'm stating, if I have a motorcycle, I should be using for myself. Okay, it should not be kept for business. It should not be kept for business. Then it will not be called as a capital asset. Okay, like for example, when you have learned in 11th, you have we have a comparison of like furniture can be used as an asset and furniture can be used as a business. Means it can be an asset, it can be a goods. Correct. So in the same way, we are stating that whatever you are holding, whatever the property is, whatever the asset is, whatever thing you are holding, owned by the SSC, it should not be used for any kind of a business. It should be used for your own purpose. Same way goes with the securities. Means anything, any security, whether it be a shares, whether it be a debentures, whether it be a bond or any kind of securities. Okay, it should be it should be kept with the SSC. Kept with the SSC. It's just not about the possession. It is about the ownership. Okay, the ownership should rest with the SSC. Okay, so any securities held by the investors, basically foreign institutional investors, or in fact any kind of investors, it is just specified that the foreign institutional investors can also be a part of it. Okay, like if you are holding a security, if you are holding a share, then that is also a part of capital asset. Okay, so it's not like it is only for foreign institutional investors. It can be also for individuals or any kind of a person that is within India. And it is not necessarily that assets should be tangible. It can also be an intangible asset. It can also be an intangible asset. So tangibility is not a question. Tangibility is never a question on whether the asset will be called as a capital asset or not. Okay, so the definition is very basic. Definition is very basic. It is simply stating that any kind of an asset that is held by the SSE, held by the SSE, it doesn't mean just about possession. It is about the ownership of the asset. Okay, so if I am owning an asset, like for example, I have a house. Okay, I have a house. Now, if that house is been rented to someone else, whose capital asset is it? Then it is my capital asset. It is not the person who is living in it. I'm not the person who is living in that house, but still, it is a capital asset for me. It is a basic thing. Okay. So as per section 214, the capital asset states that is it any kind of an asset held by the SSE, means owned by the SSE, which he is not using for any kind of business or profession. Which he is not using for any business or profession. It can include securities held by a normal person or in fact a foreign investors too. And tangibility will not be a point of question in whether the asset should be called as a capital asset or not. So a tangible asset and an intangible asset both can be called as a capital asset as per the definition states that. Okay. Now apart from the definition, अगर सिंपल स्टेटमेंट में बात करूं तो कोई भी चीज आप जब होल्ड करते हो, कोई भी चीज चीज को जब आप होल्ड करते हो, वो सारे चीज को हम लोग कैपिटल एसेट करके जनरल टर्म्स में बोल सकते हैं. ओके, दैट इज अ जनरल आइडिया अबाउट व्हाट इज अ कैपिटल एसेट. राइट नाउ there are certain things when we have to focus when we are learning about the capital asset. That first thing is what is specifically included. Means sometimes there is a question whether a particular property should be included or not. So our section 14 has been clearly stated that if these particular items are there, it should be specifically included, whether it is matching with the definition or not. Whether it is been matching with the definition or not, you have to specifically include it. There is no question of whether will be called it or as an asset or not. It should be included. From that, the first one is gold, silver, platinum, or any precious metal, even on wearing apparel. So the metals. Now everyone knows that gold is an like in ornaments or as an asset, like in bullions or in biscuits, right? So gold, silver, platinum, or any kind of metal. Okay, these are all assets, precious metals. These are all assets for us. But they are stated that even these metals on wearing apparel will be included as an asset. Wearing apparel means whatever you wear. Like it can be an ornament or it can be stitched to cloth, anything. Okay. So sometimes the precious metals will be carved as an ornament, or it can be attached to the wearing apparel, attached to, like for example, rich people's attached gold to their saris, or rich people's also have a shirt made of gold. So we have examples of it. So even that will be called as an asset. Even that will be called as an asset. Basically, wearing apparel is not a capital asset, because like for example, what the shirts we wear, the pants we wear, the like whatever clothes we wear, it is not included as a asset. It is not included as an asset. Okay, but if that particular apparel have a gold or platinum studded metals or any kind of thread in it, then we will state it as that yes, it is a capital asset. Okay, so even on wearing apparels, if you have a precious metals on it, studded to it, or any kind of related to it, then yeah, we can call it as a capital asset. So gold, silver, or any kind of precious metal will be called as a capital asset. Same way, precious or semi-precious stones, even on furniture, utensils, or wearing apparel. Same way, stones like emerald or what we say that moti and ruby and all that. So that is your stones. Okay. So if that stone is held with by you, is owned by you, then that even that will be called as a asset. Okay. It can be on an ornament, like for example in a rings or something. Okay. It can be on an ornament, or it can be on a furniture, utensils, some kind of some people have the tendency to stud it to an utensils or their furniture. So if they are using it, then that particular part will be also included in asset. Okay. So the stones also be a part of an asset. So just giving a clarification that even the stones will be considered as a capital asset. Same way, archaeological collections, drawings, paintings, sculptures, or any work of art. Okay, so we have seen that many archaeological collections have been we have a people have a tendency to buy it in biddings and all. Okay, there is an auction and there will be a bid for the high prices and they buy it. Okay, depending upon the like it's a work of art or the depending upon the person who's the artist of it, we usually have that tendency. Some people have it, obviously rich people have the tendency. So if they have the tendency and if they have any kind of that paintings with them or sculptures or any kind of work of art, then that work of art will be also considered as a capital asset. Then that is also a capital asset. Means like when you're going to a castle. Okay, if you have visited any castle as for a kind of museum purpose like that, so if they are selling any paintings in that castle, then that paintings will be asset for you. Okay, if you have bought any drawings from an exhibition, then that drawings will also be a part of your asset. Okay, so any kind of archaeological collections or painting sculptures will also be a part of your assets, right? So it can also be an asset because basically you buy it as for a prestigious matter or use it for a you have to hang it on your wall for a longer period of time. So yes, that is the reason why we consider it as an asset. Okay, so these basically are the what three items that is specifically included. Okay, so to understand it is very simple, like precious metals, precious stones, or any kind of precious work of art. Okay, so all kind of thing that you purchase it. Okay, now when I say work of art, it doesn't mean that you have to spend $10,000 for that or your 10,000 rupees for that. Okay, if you buy a painting just for 100 rupees, even that can be considered as an asset. So amount associated with that paintings is irrelevant. Okay, so the amount is not the problem. The content of the intentions behind it, what is the problem? So if you're buying it for that particular amount and if you're using it, even that will be considered as an asset. Okay, so the value depends on that. Okay, so these are the things that is specifically included what is an asset. Okay, same way we have to be very much clear that what will not be called as a capital asset. Okay, just like we learned that what is included in capital assets, and we have to learn what will not be considered as a capital asset. So first thing, any stock in trade, as discussed earlier, if you're using it for any business, if you're using anything for business, it cannot be called as an asset. Okay, like if I bought a house and if I'm using it as for business, it is my business to trade in houses. Okay, so then that particular house or that particular property will not be part of my capital asset. Okay, so in simple terms, if there is any stock, any kind of stock, it can be my bike or it can be like for example a furniture or it can be anything. If I'm using it as a stock, like it is being used as for a business purpose, then yes, you cannot be allowed to be called it as a capital gain, the capital asset. Okay, so stocks in short, whatever things that you are using in a business or it is a part of your business activity, then all those stuffs will not be considered as your capital asset. Okay, that is basically your trading item, basically. Okay, same way personal effects. Personal effects means whatever things you use in a day-to-day life. Okay, like for example, simple terms. If you're using a toothbrush, if you have a toothbrush, it is your personal effect. You have your cloth, if you're like whatever the wardrobe you have. So all these things are your personal effects, whatever you use on a daily basis. All these things will not be considered as a capital asset. All these things will not be considered as what? A capital asset. Okay. So personal effects, the day-to-day items or the normal items that you use, all these stuffs will not be considered as a capital asset because basically we don't sell it. Like normal tendencies, what I'm talking about. Like for example, if you purchase a shirt or if you purchase a top, whatever it is. So if you purchase it, you don't purchase it like with an intention of having a returns from that in a longer period of time or returns in at the end of the year or it will give you a salvage value. All these things is not the consideration when you purchase a top or purchase a shirt or purchase a pant, right? If you purchase a shoe, you don't consider that if you purchase a shoe, then yeah, after 5 years, I'll be getting this much amount, so I can waive it off. That is not the concept that is running in your mind when you purchase a shoe, right? So these things, these personal effects will not be considered as a capital gain. Okay, so personal effects is not a capital asset. It can be felt like, yeah, it can also be a capital asset. No, it is not. Personal effects is not a capital asset. Okay, except those specifically included. In the earlier slide, we have learned what is specifically included. Like for example, I said even if the gold ornaments. So the gold ornaments is something that you use daily basis. Okay, so if you are using gold on a daily basis, you will say that then that's a personal effect. Correct, it is a personal effect, but gold is specifically included. So gold, whether it be an ornament, like for example, um, ornaments comes in different materials, right? So if I'm using a duplicate one, if it is not precious, then it is personal effect. So it is not a capital asset, right? Like for example, girls use that glass bangles, right? So if they are using glass bangles, then that is not personal effects. If they are using gold bangles, then that is not a personal effect. I mean, even being a personal effect, it will be called as a capital asset. Okay, so the glass bangle is a personal effect, so not a capital asset. But gold bangle, even if it is a personal effect, it is a capital asset. Okay, so that's why it said that except those specifically included. Okay, so whatever if there is a metal included in it, precious metal included in it, or a precious stone included in it, then yes, it is a capital asset, even if it will be a personal effect. Okay, like I said, movable properties. Basically, movable properties in personal effects, if it is a movable property, it is a part of your exceptional criteria. Personal use, own or family, whatever things you use for your own purpose or your family purpose, then all these things will not be included as your capital asset. Okay, so movable property and personal use item that you use on a daily basis, all these things will not be considered as your capital asset. These are your exceptional criteria. Next, agricultural land in rural area of India. Now, this is a specification. Now, this you have to, you cannot understand it, you have to learn it. Okay. So, agricultural land in rural area of India. So, there are three things you have to learn. First thing, agricultural land. Second thing, it is in rural area. And third is, it is within India. Any land which is within India and it is in a rural area, and it should be an agricultural land. Okay. If three of these conditions, three of these criteria is fulfilled, then it is not considered as a capital asset. Okay. So in general terms, if we say, in general terms, if you'll see, yes, it can be a capital asset, right? It's a land. It is a land basically. So yes, it should be a capital asset. But they have given it as an exception that agricultural land in which area? Rural area of which country? India, means within the country, will be not a part of your capital asset, not a part of your capital asset. So in case if anything in this criteria changes, like for example, commercial land in rural area of India, taxable. Agricultural land in urban area of India, taxable. Taxable in the sense like capital asset. Okay. So agricultural land in rural area of Australia or whatever the other countries out of India, whatever it is. So that will also be considered as your capital asset. Okay. So the point is, what is an exception? Exception is you have to fulfill all the three things. First is agricultural land, second is rural area, and third is it should be within India. Okay. Next is bonds, gold bonds or any kind of bearer bonds. Okay. Gold bonds of 1977 or 1980 issued by the central government, or special bearer bonds of 1991, or gold deposit bond certificate issued by the gold monetization scheme. It is like basically bonds. Okay. Certain bonds, basically bond as a security is a capital asset. Bond as a security is a capital asset, right? But specific bonds like the bonds of 1977 or the 1980 or the special bearer bonds of 1991 or the gold deposit bond deposit certificate issued by the gold monetization scheme, like these specific bonds will not be considered as a capital asset. So as I said, these are not things that you should understand, it is a thing that you should learn it. You have to learn this as it is. So there is no idea of learning it, you have to learn this. Okay. Stock in trade, yeah, it can be we can understand it. Personal effects, we can understand it. But agricultural land, bonds, special bonds, everything you have to learn it, you have to by heart it basically. So these are the exceptions, like what should not be considered as a capital asset. Okay. So Till now, we have learned that what is a capital asset, what should be included in a capital asset, and what should not be included in a capital asset. Okay. So, if you have any doubts till now, you can just ask me now.
No, sir, it's pretty clear. Hello?
Yeah, yeah,
Sir, I'm saying it's pretty clear, not as of now.
yeah. Okay, fine. Okay, sir. So I'll just move forward with that. Next is specifications, sections. Okay. Now, as per section 247, asset must be transferred. So from capital asset to capital gain. From capital asset to capital gain. In that journey, the main part of that journey is transferring. The main part of the journey is only after you are transferring that asset. Okay. Like to have a profit, you have to sell something. Get a profit, you have to sell something, right? In the same way, if to get into this part, like capital gain part, then you have to transfer something. Transfer is like something what we call as sale in general sense. Okay, so this part, the transfer part, section 247 is a crucial element as an activity point of view. Is a crucial element. Like if you don't understand what is transfer or what are the things that we call it as a transfer, it is pretty much tough to understand whether the particular activity can be considered for capital gain or not. Okay. So what are the things that we call it as a transfer? So transfer, the word transfer includes first sale, exchange, or relinquishment. Sale means simple. You're buying, you're giving something as a material and for a particular consideration, monetary or non-monetary particular consideration. Okay, that is a sale. Exchange, giving in something for something else. Like in, for example, like barter, what we will say that exchange. Okay. Next is relinquishment. Relinquishment is like surrendering something, like you voluntarily surrendering it. Okay, like for example, you have learned learned this concept in shares, like you're surrendering the shares, like you're giving up the shares basically. Okay, you voluntarily giving up this. That is what we call as relinquishment. So that is also a type of transfer. Okay, so you were owning that asset. Now you're voluntarily submitting to the government or to the company or to someone else. So that is also a relinquishment. Okay, so voluntarily transfer or voluntary surrendering of the thing. Next is extinguishment. Extinguishment is like your maturity is getting finished off or you are being seized off. Okay, like it is not voluntary, it is by force. It is by force. Okay, like either due to maturity you have to submit that asset. Okay, or either due to some other rules, a change in the rules, or due to some other aspect, you have been forced to surrender the asset. Okay, so that is what we call as extinguishment. Means extinguish. It is like put off. It is just put off or it is just waived off, right? So मतलब जबरदस्ती उनको बंद किया गया है ऐसा कुछ रहेगा. So that is what we call as extinguish. Okay. So the sale, exchange, relinquishment, that is basically voluntary happens. Okay. On the second hand, it is extinguishment that happens by force. Okay, either by law or by any other matter. Next is compulsory acquisition. Compulsory acquisition. Now, this is a broader concept actually. We have to learn it in other slides too. But I'll just give a brief idea about what is compulsory acquisition. It is like you are owning the asset. Okay, you are owning the asset, and someone is coming to you towards you and forcefully acquiring that asset. Forcefully acquiring that asset. Now, in the concept of shares, this compulsory acquisition is extinguishment. Okay, like the company is stating that they are no more interested in issuing the shares, so by rule they can buy back the shares, and I have to give the shares. If I'm owning it, I have to just give it up the shares because the company itself is buying it back. Okay, that's a different concept. That's a lawful concept. That is a very lawful concept. But when we say compulsory acquisition in a normal asset, like for example, someone is going to a family and was stating that you have to sell me this property, and even if he likes it or not like it, he has to do it. Okay, that is what we call as compulsory acquisition. Now, in general sense, we'll say that if this is a case of compulsory acquisition, then this is unlawful. And if it is unlawful, how a section can support it? So here, compulsory acquisition is only considered if it is done by the government. and that too by the central government. Okay, if it is done by the government and that too by the central government or the approval by the central government. Okay, like for example, for the purpose of widening of the road, the bordering shops or the bordering houses has to leave their places. They can get a replacement place or whatever it is, but the point is they have to leave that place. Okay, for the development activity or for the any some other activity, they have to leave that place. Okay, so if a flyover is coming in between some sorry, your house is coming in the development project of a flyover, then in that case you have to leave that house or leave that property. You may get a some other place. They will provide some other place. They will give you some amount, whatever it is. But the point is, your will doesn't stand there. You can ask for the remuneration. You can ask for the consideration. The point is, your will that no, I don't want to sell is it doesn't stand there. That kind of an arrangement is what we call as compulsory acquisition. Again, I'm stating it. Compulsory acquisition is only lawful or only accepted if it is done by the central government or as in the approval with the central government. That is about the compulsory acquisition. Next, conversion into stock. Like it is an asset, currently it is an asset, but later on it is being converted to as a stock. Okay, like for example, I have a share. I have shares of many companies. I'm investing in many companies, but but that was with the intention of that I will hold that asset. Okay, but later on, I changed my style of business and I become a broker. I became a broker. So now these assets which I use for my personal will be converted as a stock. Okay. So that conversion from asset to goods, that conversion will also be considered as a transfer. You're getting my point? Initially, it was an asset. Now it's a goods. Okay. Like for example, if I'm starting a furniture business, if I took my own household furniture to the shop as a goods, then that is a conversion of asset to stock. That conversion is also considered as a transfer. Next, part performance of a contract means if there is a contract and it has many elements of it, if it has many elements of it, then that element, if completed in a part way, in a particular segment way, if that part performance is completed, even that will be considered as a transfer. It is no need that entire contract should be finished. Okay. So as to consider as a transfer, it is not needed that the entire contract should be finished. Even the part performance of the contract will be considered as a transfer. Okay. So like for example, I gave a contract to build my house. For that purpose, they have to first clean the like level the land and then have to build a structure above it. But the point is, the contractor finished off by shaping up the land, but he didn't build up the structure. Even that part will be considered as a transfer. I mean, that for part performance will also be considered as a transfer. Okay, in case if there is a transfer involved in it. Okay, so part performance of contract is also transfer. Maturity or redemption of zero coupon bonds means like as I said, for the other securities, sale, extinguishment, relinquishment, everything. In the same way, for the zero coupon bond, yeah, like that is like zero interest bond. Okay, if there is a redemption or maturity of such bonds, in even that particular segment is also considered as a transfer. Okay, in simple terms, if the bond, like in securities, if the bond is being matured or it is being redeemed by any reason, even that arrangement will be like considered as a transfer. So these are the basic terms what you need to understand as in the term transfer. Transfer is not just about sale. It can include many other versions, many other interpretations. Okay. So it can include sale, exchange, relinquishment, that is voluntary, extinguishment, that is forceful, compulsory acquisition by the government and that what central government specifically, conversion into stock, that is asset to stock. Next is your part performance of a contract, and next will be your maturity or redemption of zero coupon bonds. All these arrangement is considered as a transfer. Okay, so that is the definition about what is transfer. Okay. Next, date of transfer. Now, date of transfer is very crucial because on the basis of date of transfer, your assessment year and the previous year will be determined. Date of transfer. On the basis of date of transfer, only you can determine what is your assessment year in which you have to calculate the capital gain. Okay, like for example, the date on which you're making the sale or you're transferring the property is 25th of March 2020. So the previous year should be 1920. If the same thing happens on the 1st of April 2020, then the previous year that should be in consideration will be 2021. Okay, so the date of transfer defines on which assessment year or previous year that your assessment will be carried out, or the consideration should be made. Okay, so the date of transfer is very important, very crucial, because that defines on which year the entire calculation will become computed. Okay, so previous years is decided by the date of transfer. As I said, it is very crucial to just to understand which year you have to calculate it. Okay. Next, date of receipt of consideration is not important. Now, if I made a sale agreement, like if I have said that yes, I'm giving up the property to the so and so person. If I made the sale agreement, okay. So when is the consideration is being paid is irrelevant. Means it can be in advance or it can be after some period. Whatever it is, it doesn't mean that, like for example, um, on 25th of March 2020, on 25th of March 2020, you have made the sale. On 5th of April 2020, you got the consideration. So on which year you have to compute? The previous year that you have to consider is 2019-20, because your sale was done in 1920. Okay, so that's the reason. The receipt of consideration is like, for example, amount, or in case of barter, the other property, whatever it is. The consideration that you receive is not important. The date of consideration itself is okay. So date of consideration is not at all important. Only the date of sale or the transfer is important. Okay. Next, it is also needed to distinguish short-term and long-term capital assets. In the further slides, you will be able to understand what should be considered as a short-term asset and what should be considered as a long-term capital asset. Okay, so which is a short-term asset and which is a long-term asset, both should be understood well before defining which capital gain, because we have a two type of capital gain. One is long-term capital gain and one is short-term capital gain, but we'll define it later. Okay, so these are the basic things. Now let's define the terms. Short-term capital asset. Okay, now in general, as that name says, that short-term capital asset, we can have a general idea, like the asset which is for a short-term period is what we call as a short-term capital asset, and the
One year,
asset that is for the long
one
term.
year, I guess, right?
Sorry.
Gains which happen in the same financial year or like two financial years are short-term capital gains.
No, it's not like that. It is depends upon the term of use. Okay, I'll just get into the broader concept of it. Okay, so what is short-term capital asset is basically depending upon the term of use. Okay, it doesn't mean about the number of years you use. It doesn't mean that you should use like from for 2 years, or it is specifically with the 2 years or not. It depends upon different assets and assets usage. Okay, it is not fixed with the term period is not fixed to all the assets in the same way. Okay, some assets it is for 2 years, some assets it is 1 year, or some asset the basic criteria is for 3 years. Okay, so it depends, varies. Okay, so let's understand that short-term capital asset. Okay, for the short-term capital asset, first thing you have to know that it depends on the usage of the asset. In general terms, it depends on the usage of the asset. The asset never defines that it is a short-term asset or long-term asset. As I said, I'm stating it very clearly. All the students have that kind of a tendency. Okay. As for the shortage of the time, I'm not able to give some examples on it. Generally, I used to ask students like give an example and ask them like what do you say that this is a short-term asset or this is a long-term asset? Like for example, I'll say land and building and ask them which is a long-term asset or a short-term asset. All the students will have a habit of saying that it is a long-term asset. If I said that like for example, tools, equipments, short tools, small tools or that. if what is that, then they have a confusion that it can be, sir, it can be both long term or short term, both. Okay, if I'm using a like a pencil, like a simple pencil, what will it can be? It is said as a short term asset. Okay, so it's not like that. It all depends upon the usage of the asset. If I'm using the land just for a month, it is a short term asset. If I'm using land just for a month, yes, it is a short-term asset. It should not, it cannot be said as a long-term asset. If a machinery which I'm using, if I'm not using for a very long span of time, then it is a short-term asset. I'm using just for minor some days or some months, then it is a short-term asset. So the asset never defines whether it is a long-term or a short-term asset. Okay, it all depends upon how much time, how much period, what is the term of usage. Okay, so that defines whether it is a short-term asset or not. Okay, so the date of purchase, acquisition, and the date of transfer or sale is considered. The time gap between the purchase and sale. The period of holding. In short, we can say that the period of holding. From the time which I purchased it or acquired it, or from and to the time of sale or the time of transfer. In that period is what we call as period of holding. Okay, that period of holding or period of ownership is what should we consider. Okay, now depending on different type of assets and what should be the period. Okay, like asset, if your asset is a security, security means everything, shares, debentures, everything. Okay, security is listed in a recognized stock exchange, securities listed in a recognized stock exchange, or unit of equity oriented fund or unit of UTI, that is unit trust of India. Okay, so unit of equity oriented fund, that is basically what we call as a mutual fund. In general terms, we call it as a mutual fund. Okay, so units, equity oriented fund or UTI, okay, are either zero coupon bond. These three criteria of assets. If these are the assets what you are considering, then the term of usage, it should be 12 months or less. Then it is a short-term asset. If you're using these assets for a period of 12 months or less, then it will be called as a short-term capital. Okay, so the assets we are talking about is listed securities that too in a recognized stock exchange, and the units we can short it as the units or the zero coupon bonds. Okay, if these are the assets, the term of usage is 12 months or less. Means the basic criteria what we say as 12 months. Okay, so if there is 12 months, exact 12 months, or it is less than 12 months, then it will be called as short-term asset. Okay, so obviously by the same way you can understand what will be the long-term asset. Anything that is used for more than, I'm stating it clearly, more than 12 months, it is long-term. 12 months is short-term. 12 months is short-term. 12 months or less than 12 months is short-term. If it is more than 12 months, only then it will be called as a long-term. Okay, and if it is, if I said that long-term, more than is like even it is more than by 1 day, it is long-term. Like, for example, if it is 12 months, exact 12 months, that is your 365 days basically, okay, then it will be called as a short term. And if it is going to another day, 1 or 2 days, if there is a gap of only just 1 or 2 days, that will be called as a long term asset. Because we have in tax, there is a provision of rounding off the period. Okay, in that period, due to that reason, even a day in excess will be considered as a long term asset. Okay, second criteria is for 24 months, that is 2 years. Okay, 24 months or less. For that, the asset that should be considered is unlisted shares. Unlisted shares or land or building or both. Land or building or both. Okay, so land, building or both means which includes obviously your house properties, what we consider. Okay, so unlisted shares, land, building, for these, the period of holding should be less than or up to 24 months. If that is the case, it will be called as a short-term asset. If we are using it for more than 24 months, then it will be called as a long-term capital asset. Okay. And for the others means what? Unit of debt-oriented fund means mutual funds of debt, basically related to debt. Okay. So debt-oriented fund or the other capital asset, any other capital asset. Okay. It can be plant or machinery, kind of anything. Okay. So any other capital asset, for them, the period of holding should be 36 months on the criteria, on the basis of 36 months. If you are using it for 36 months or less, it will be called as a short-term asset. If it is more than 36 months, like exactly more than 36 months, it will be long-term capital asset. Okay. So you just have to by heart this criteria. Okay. Again, as I said, there is no understanding the fact. It is about all about learning the facts. Okay. So security, listed securities, equity oriented funds, and zero coupon bond, 12 months. You can remember in that way, 12 months. Okay. Unlisted shares, land on building, 24 months, and unit debt oriented fund or other capital assets, you can go with the 36 months. Okay. But you should be very clear with that exactly being on that period is short term. Like exactly being 12 months or 24 months or 36 months is short term. Okay. And more than that is only when we consider it as a long term assets. Okay. So this is the asset wise, period wise bifurcation of what is short term capital asset. Okay. In the same way, we have long term capital assets also. Consideration is same. Concepts are exactly the same. Listed securities, equity oriented fund, zero coupon bond if used for more than 12 months. Unlisted shares, land or building if used for more than 24 months. Debt oriented fund or other capital asset if used for more than 36 months. That is the basic bifurcation about what is long term capital asset and the short term capital asset. Okay. So this is a basic bifurcation, long term and short term asset. This thing is very essential in every aspects of capital gain. Means if you are going to compute the capital gain, the first question should come into your mind is whether the asset, whether the transaction is a long term asset or a short term asset. Okay. We cannot go blindly with the name of the asset. As I said, we cannot state that if you are using shares, it should be a short term asset. We cannot say that. Okay. Or if you are having the asset that is in consideration it's a land or machinery. Okay. In that case, we cannot state it, I blindly state it as a long term asset. Okay. You should be very clear that if there is an asset, if the name of the asset is mentioned, it is irrelevant till the time of the stable. Okay. So if you are having the name of the asset, you should first see what is the period of the holding. What is the period of holding? Okay, only then you can get into the conclusion whether the asset is a long-term asset or a short-term. So it is very crucial, very important, very pivotal to understand what is the term of holding. Okay, so that is your long-term asset and short-term capital asset. I hope you are clear with that.
Yes, sir. Clear.
So moving ahead, next, terminologies. Okay, now we have to learn about the terminology. The first terminology that we have to learn is full value of sale consideration. Now, what is full value of sale consideration? It is what we call as selling price. In simple terms, if we say that it is what we call as selling price. Okay, selling price, like on what value we have sold it. If the asset is being sold, on what value we are selling it. Okay, that is what we call as full value of sale consideration. Full value of sale consideration is not like that you have to be paid in one single amount, or there is no provision of multiple payments and all. There is no such kind of provision. Any amount that has been decided by the buyer or seller, whether paid in credit or whether paid in installment or whether paid in some kind of an exchange, whatever it is, okay, it doesn't matter at all. Whatever the price they have decided, that price itself is what we call as full value of sale consideration. Okay, so the value that is decided by the buyer and seller mutually by consulting.
Muted Q.
Sorry.
Sir, it would have been someone who unmuted by mistake.
Okay, fine. So yeah, the entire consideration received or receivable, as I stated earlier, the term like date of receipt of consideration or receiving the consideration is irrelevant. I have said to you it is as much earlier as the starting of the lecture. So at that point of time, I've cleared it that consideration that you have received it or you have not received it is irrelevant. If you have made the sale, then there is an agreed value. Okay, so the amount should be received is not a part of your full value of sale consideration. It can be received or it can be receivable. Okay, if you have made the sale, that sale value, the agreed value, is what we have to consider. Okay, like for example, you have an agreed value of 60 lakhs for a land. Okay, but you have received only 20 lakhs. So what is your full value of sale consideration? It is still 60 lakhs. You have received only 20 lakhs till now. You may receive it in future, but it is received or not received is not relevant. Okay, it is not relevant. The only concept is what the agreed amount you have decided. It is 60 lakhs, so you have to calculate according to 60 lakhs. Okay, so that is your full value of sale consideration, the agreed value. Okay, so they calculated on accrual basis and not on cash basis. As I said, if you are receiving it or not, it's not a matter of consideration. Okay, it's just that you have decided it means it has been accrued. That's it. Okay, next. In short, selling price or agreed value for the sale of the asset means the other terminologies what we can what we can understand. Like when we are using in like when we are computing, you have to use full value of sale consideration because that is a technical term used in it. Okay, but to understand, you can say it as it is an agreed value or it is a selling price. So it's just a terminology means for understanding it. Okay, so that what is full value of sale consideration? It is just the selling price or the agreed value decided by the seller and mutually accepted by the buyer. That is what we say. So it is not necessary that you should be received it in well in advance or whatever it is on the cash basis. No, it's not like that. It can be received or it can be a receivable amount. It is just a matter of that you should have agreed it. That's it. That is full value of sale consideration. Next term, there are different types of costs. Like full value of sale consideration is your income part, right? Full value of sale consideration, that's your income part. Like if you're the owner of
If you are the owner of the asset,
oh, in that case, if you're the owner of the asset, in that case, full value of sale consideration is the income part, right? Now we have to learn about different types of costs. So there are three types of costs. Basically, there are three types of costs: before, between, and after. Like for example, cost that is being incurred at the time of purchase, what we call as before. I'm just for a simple understanding, I'm stating it as before. There is no technical term it as before. Okay. So I'm stating it like if you have any expenses that is at the time of purchase, that's the first kind of criteria. That is what we call as cost or expenses met at the time of purchase of asset. Okay. Also called as cost of acquisition. Also called as cost of acquisition. So any expenses met at the time of purchase of asset. Any cost or expenses met at the time of purchase. That is what we call as cost of acquisition. The term, the technical term what we use is cost of acquisition. Okay. Now, it includes cost of the assets, obviously, on what price you are purchasing it, or anything related to that. Anything in related to that. Like for example, if you're purchasing a like for example, like a motorbike or something. Okay. So the cost of the motorbike, okay, the taxes related to it, or the insurance related to it, or the like for the RTO clearance related to it, anything that is related to it at the time of purchase, all these expenses will be called as your cost of acquisition. Okay, we have learned it in the financial accounting also that any expenses at the time of purchase of the asset is asset. Like the wages paid to for installation of the plant and machinery is plant and machinery and not wages. Correct. In the same way, any expenses at while purchasing the asset will be considered as a cost of acquisition. Correct. So that is what we call as cost of the asset, and any expenses incidental means related to or like attached to the purchase of the asset. For example, stamp duty, brokerage, making charges, etc. These are the incidental expenses relating to purchase of land or building kind of thing. Okay, properties, estates. For that purpose, you can go for stamp duties, brokerage, making charges, etc. Okay, making charges is basically for ornaments. Okay, so these are the incidental expenses that we have. Like for example, when we purchase a gold ornament, you have to pay for the gold and also for the making charges. Okay, so that's what we that's why the cost of gold and cost of ornament varies, because cost of ornaments is much higher than the cost of gold because of the making charges. Simple to understand. So cost of gold, if cost of gold is 60,000, making charges is 20,000, what is the cost of acquisition? It is 80,000. Simple to understand. So that is cost of acquisition, any expenses that is met at the time of the purchase of asset. First type of expense. Second, cost or expenses after purchase but before sale means at the time of holding. At the time of holding, you have met with some other expenses. That is what we call as between the what I said as between. Okay. So what is between? It is simply after purchase but before sale. Means at the time you were using that asset, you have made some kind of an expenses. Like for example, if I'm owning a motorcycle, if I'm owning a bike, I have made some repairs in it. I may have made some modifications to it. Okay, so all these expenses will be considered at this point. Okay, if I'm like for example, I have a house. Okay, I may have reconstructed it, or I may have made an additional floor to it. Okay, so these are the expenses what we are considering. All these expenses that been done during the period of holding is called as cost of improvement. It is known as cost of improvement. Like as I said, any kind of repairs or renewals or reconstruction or any kind of additions. Okay, all these kind of expenses is what we call as cost of improvement. The between, what I call it as a between. Okay, so cost of improvement, any expenses at the time of period of holding. Okay, it includes any type of repair, it includes reconstruction, and it also includes renovations. Okay, it can be a repair, it can be a reconstruction, or it can be a renovation. Okay, every kind of such expenses will be a part of your cost of improvement. Okay, so first thing that it should be made clear that it is only after the purchase and but before sale. Like for example, as I said, while I'm purchasing a motorcycle, I'm paying for insurance. Okay, that is cost of acquisition because it is at the time of purchase. Later on, every year I pay for insurance. These are can be considered as a cost of improvement. Got it? That is a kind of expenses. For example, building an extra floor expansion, etc. Okay, so these are the cost of improvement. Then there is a third criteria, that is cost or expenses met at the time of transfer or sale of asset, or in my terms, it is called as after. Okay, so after means at the time of sale. At the time of sale, all that expenses will be called as your transfer expenses. Okay, or in simple terms, you can also call it as a selling expenses. Okay, so these are this is the third type of cost. This is the third type of cost, like any expenses that is met at the time of sale. Okay, so you may get confused, like for example, the term brokerage, okay, or the commission or the stamp duty. Okay, these are the terms that can come at the time of purchase and as well as sale. Like for example, if I'm purchasing the land, at the time also I have to pay for stamp duty sometimes. Okay, like sometimes in the sense it depend upon the like what is the mutual contract between the buyer and seller. Okay, so like for example, we'll take for brokerage. Okay, so if I'm buying a asset with the broker, so I have to pay the brokerage. Okay, in that same case, if I'm selling the asset through a broker, at that time also I have to pay for the brokerage. Okay, so brokerage comes at the time of purchase and as well as sale. But when it comes at the time of purchase, it is cost of acquisition. And if the same brokerage comes at the time of sale, it is transfer expenses. Okay, so don't go with the name of expenses. Go with the term period or go with the time at which these expenses are being met. Okay, like as I said, brokerage. Some people have the tendency like they always put like they have just read it brokerage 3,000. They just put it in the transfer expenses. They won't see that brokerage at what time, at the time of purchase or sale. Because if it is at the time of purchase, it is cost of acquisition, and if it is at the time of sale, it is transfer expenses. Okay, so you have to be very clear with that. Okay, what time these expenses are being met. Okay, it includes any expenses incidental to sale of the asset, as in same what we have saw in cost of acquisition. Incidental to purchase of the asset is cost of acquisition. Incidental to sale of asset is transfer expenses. Okay, it is deducted from full value of sale consideration. Simple to understand. Like for example, like if I'm going with the timeline, I have decided a cost of decided my sale value. Okay, so I'm deciding that yes, for 60 lakhs I'll be selling my property. So my broker comes in between and says that yes, I'll sell the property for 60 lakhs. Okay, fine. He finds a buyer, he approves the amount, okay, and sells my property. Now, what happens is the buyer will pay that 60 lakhs to the broker, and what the broker will pay, broker will deduct his brokerage and pay me the balance amount. Correct? So the point is brokerage at the time of purchase and at the time of sale, both are expenses. Correct? Brokerage at the time of purchases and as well as at the time of sale is expenses. Okay, so it will be deducted from full value of sale consideration, or in simple terms, it is basically a cost. It's basically an expenses. Okay, so yes, you have to deduct it from the full value of sale consideration. Okay, either with other expenses or separately. It depends upon you, or it depends upon your comfortability. You can do that. So these are the basically three kinds of expenses. For example, like commission, brokerage, etc. So these are the three terms of expenses. Like first is your cost of acquisition, that is at the time of purchase. Second is cost of improvement, that is after purchase but before sale. Okay, and third one is your transfer expenses, that is at the time of sale. Okay, so these are the three main elements of cost. In fact, these are the three costs of your capital gain. What you have to do is, now we have learned about one income and three costs. Correct? One income is full value of sale consideration. Three cost is uh, cost of acquisition, improvement, and transfer expenses. You have to just deduct it. You have to just adjust it. Income minus expenses. Whatever you receive is capital gain or capital loss. If your income is higher than the cost, it is capital gain. If your income is less than the expenses, cost, it will be capital loss. That is what in entirety what we call as capital gain. Okay, so you now know what is the income in capital gain and what is the cost in capital gain. You just have to adjust it. If it is positive, then it is gain. If it is negative, it will be a loss. Okay, so for today we have learned about what is capital asset, what should be capital asset, what should be included as in capital asset, what should not be included in capital asset, what is called as a short term asset, what is called as a long term asset, what is your full value, what are the terminologies that we should understand for the term transfer. Okay, then we learned about different terminologies like full value of sale consideration. Then there are three types of cost, that is cost of acquisition, cost of improvement, and transfer expenses. Okay, so adjusting your income and expenses is with the resultant positive or negative, whatever it is. On the basis of that, you will give a gain or loss perspective. Correct? That is in entirety what is capital gain. Now, after this, you have to just learn about one more concept known as indexation. Okay, if you have learned that part, the capital gain is completed. Okay, so I think the time of the lecture has been ended, so we'll continue in the next lecture. Okay, so if you have out in till now, you can just ask me.
So what was the last sentence you mentioned?
uh, about the indexation, right?
Yes, sir.
Yeah, indexation is a last concept of capital gain. If you have learned that indexation, that will be explained in the next lecture. Okay, at that time you will know
Okay,
that
sir.
what is indexation, or what is the use, or what is the purpose of indexation. Okay.
Okay. All right,
Right,
sir.
sir.
Right.
Thank you so much, Prem, sir. We have understood a lot, many concepts. It was a very informative, and the coverage of the topic was also very vast. You have
True, ma'am.
very wonderfully explained the number of examples and multiple dimension to each of the things. So we are also going to have I can say we are also having to encash this opportunity to listen to Mr. Prem, sir, in tomorrow's lecture also. So thank you so much, sir, for today's lecture and for your time.
Thank you, ma'am. Thank you. Sure.
Thank you so much, sir.
Yeah.
So I'll close the session, friends. See you tomorrow in the next lecture.
Sure, ma'am. Ma'am, so should we put the attendance in the chat box?
I have already given you this. Actually, every one of them have already taken the attendance in the chat box. I've already collected the attendance. Didn't you put it?
No, ma'am, I did not. Actually, I was just listening to sir. That's why I missed it.
Okay, not a problem. Just add it so that I can take your attendance too.
Sure, ma'am. Got
Okay,
it,
then.
ma'am. Thank you.
Yeah, okay, then. See you tomorrow.
Sure, ma'am. Thank you.
म्हणजे जॉईन झाले मीटिंगमध्ये मग तेव्हा लिव्ह करताना ते ऑटोमॅटिक हा हे 3 डॉट्स आहेत ना स्टॉप